A warm welcome to all business accounting students once again. And today we will look at mixed cost. Now you will remember that when we classified costs into their behavior, we could use mixed cost also. Now you will remember that mixed cost had a component of variable and a component that was fixed. Now maybe you asked yourself, how do I determine the fixed component and the variable component? Now in this video, I will show you how to do that. Now we have actually three methods to determine the fixed and the variable elements. The first one is that scattered graph method. Then we have the least square method and the high-low method. Now, for purposes of our curriculum, it's important that you know how to apply the high-low method, but still you need to know that we actually have three methods. And then the last one, we will now look at the last one on how to apply the high-low method. Now the high-low method only consider the total cost in relation to activity level. It's not the most accurate. And why is it not the most accurate? Because we only use 2 observations, while in the other methods we use more observations. We only use 2, and which 2 are we going to use? We will use the lowest and the highest. Now we are talking about production level, so it's the lowest production level and the highest production level. Now remember, fixed cost does not change with activity. You will remember this from previous lessons. So the change in cost at different output levels will then be the variable cost. Now this is our first example on how to use the high-low method. And where do we start? First of all, I will always give you a table, or I will give you various levels of production with a production cost. So in this one, we have different months. We have January up to May, and then we have the units produced in each month, and we have the cost to produce those units. All right, so where do we start? We choose the highest activity level. And the highest activity level, if we look at this table, is then in February. And the production cost with 116 units is $360. We can say this is Namibian dollars. So that one is the highest. Now we need to determine the lowest level. The lowest level, if I look at this table, is 30. That was in April, and the production cost for that 50 units was $150, and I will only say there that was the lowest level. Now we have a very simple formula, and first of all we are going to calculate the variable cost. So in this formula, that triangle means it's the difference between the high and the low. So let's quickly go back to encircle the highest. There's my highest, and my lowest was that one. All right, so this means then that that triangle is the difference between 116 and 30, and 3660 and 150. Remember, okay, so above the line we have the difference between the high and low in cost. So that will be the 360 less the 150. And then below the line we have the difference, the triangle, in activity. So that will be the 116 less 30. So let's quickly do this one. We have 360 less 150, 116 less 30. I can only encircle those ones there again so that we remember. There we are. And then if we deduct 150 from 360, we will have 210, then divided by 86 units. How did I get the 86? It's my 116, which was the highest less the lowest. There's my lowest. That will give me 86. Now, if I take 210 Namibian dollar to produce 86 units, then my per unit cost will be 2.44. And this is then my variable cost. Very important when you do this formula, you calculate variable cost per unit. Right, so now that we calculated variable cost, we need to calculate the fixed cost. So how do we do this? We are saying that total cost, remember we had a total cost for 30 units, was 150. This was the lowest level. All right, so fixed cost is then my total cost less my variable cost. Total cost I have, it's the 150. That was according to my table, less. Now I will calculate my total variable cost for 30 units. So it's $2.44. That was my variable cost per unit times 30 units. And that will give me 73.20. And now I deduct the variable cost from the total cost. And my fixed cost, in other words, is then 76.80. Now remember, this method is not the most reliable method, but at least you will have some sort of idea of the fixed cost. Here's another example. We have 3 months. Now remember, to do this method, you need at least a highest and a lowest, so you need 2 observations. All right, so in January, I had 600 units that cost me $2,750. In February, I had 800, which costed me $3,250. And then in March, it went up to 1,000 units, and my total production cost was $3,750. So these are my output, these are my units, and these are my total cost. Now, I'm asking you to calculate the fixed cost and the variable cost. Now, when you see this formula, this is to calculate your variable cost. You will remember that triangle is the difference between the highest and the lowest. The same with below the line, difference between the highest and the lowest. And if I take the highest is 3,750, there's my highest, that's my total cost. My lowest was 2,750, there's my 2,750. So that will give me 1,000. 3,750 less 2,750 equals 1,000. All right, if I look at my units, and my highest were 1,000 units, and my lowest were 600 units. So it's 1,000 less 600 equals 400. If I divide 1,000 by 400, then I will get 250 per unit. So I'm saying, according to this information, my variable cost is 250 per unit. So if I'm saying my total cost for 1,000 units was 3,750, then I can now calculate my fixed cost for 1,000 units. How do I do this? I say that my total cost equals fixed cost and variable cost. So I'm saying then that fixed cost equals my total cost less my variable cost. My total cost, 3,750, less my variable cost for that amount of units. Remember now, you must take the units into consideration. We calculated the variable cost of 250 times 1,000 equals 2,500. So then I'm saying my fixed cost for 1,000 units is 1,250. We can do another example. In this example, we have 4 observations: January, February, March, April. We have the units for these 4 months, and we have the total cost for the 4 months. And you will see, as my units are increasing, my total cost will also increase. All right, so now calculate the variable cost and the fixed cost for 800 units. All right, First of all, we must determine or identify the lowest and the highest. Now the lowest will be that 800 and the highest will be 1,200. The lowest, my cost is 93, and the highest, my cost is 119,500. These are the two observations that I need when I do the high-low method. All right, so now I take my my formula, which is saying the difference between the difference between the highest and the lowest of cost. That is 119,500 less 93,000, and then beneath the line is my difference in output. It's my 1,200 less my 800. There we have that one. So if I do this calculation, I will end up with a variable cost of 65 Namibian dollar per unit. So remember, they ask us what is the fixed cost for 800 units. So now I'm taking the total cost, 93,500. There's my 93,500, which related to 800 units, less my variable cost per unit, times my output of 800, deduct this, and then you will see that your fixed cost is 41,500 for the 800 units. This is then the end for this lesson. So during this lesson, you learned how to determine your fixed cost and your variable cost when you use the high-low method.